Hello, everyone. We're going to wait a few minutes so that people can join. If you're joining, you'll see you have some chat functionality available to you. So as you come in, feel free to use the chat to introduce yourself, your name, where you're dialing in from, your company name, a quick one-liner about what your company does. When you're chatting, you have an option to select whether that chat message goes just to the panelists or to everyone. Please chat to everyone. Let's get the conversation going. I miss seeing your faces so much and being in the same room and having that networking dynamic, but hopefully we can have that happening through the chat. So again, as you come in, feel free to introduce yourself, your name, where you're dialing in from, your company name, and a one-liner. And we're going to give a few more minutes here just for everyone to connect and join, and then we'll get kicked off. So, so as people are joining here, what I'm going to do here is introduce myself. My name is Dan Dato. I'm the Chief Marketing Officer at Early Growth. I joined the company a little less than 2 years ago, and I got to know the folks at Early Growth because my background wasn't necessarily as a CMO. It was as a CPA, but more importantly, it was as a serial entrepreneur. When I started my last company close to 10 years ago, one of the first things I did, even though I was a CPA, even though I had been a CFO before, one of the first things I did was I went out and hired Early Growth to handle the finance function of my startup. So over the years, I've been around the block. I've been in your shoes as entrepreneurs most of my life. Raised close to $100 million of capital, lost a good chunk of that in the half a dozen or so venture-backed startups, though. Had one or two winners. I'm coming to you today from Los Angeles, from Santa Monica specifically, but I started my life on the East Coast, and over the course of my startup career, have had stops in Asia and Europe as well. So excited to be with you here today. Again, the webinar here, the structure is we're going to have about a 40 to 60 minute conversation with audience Q&A. As you have questions that come up through the course of the webinar, please submit them through the Q&A functionality. If you put them in the chat, we're going to have a few hundred people attending here today. If you put them in the chat, I'm afraid that they'll get lost. So if you have a question for Mike or Kellan, please submit that through the Q&A and we'll try to get to it. The chat functionality that's there, use it, introduce yourself to the rest of the audience, make sure you're chatting to everyone, give us your name, the name of your company, a one-sentence description, and where you're dialing in from. And lastly, this webinar will be recorded. In the next 48 hours or so, we'll send a follow-up email with a link to the recording on YouTube, as well as these materials that we're sharing today. So again, welcome everyone. Real briefly, Early Growth. For those of you that don't know, Early Growth provides the accounting and finance function for venture-backed startups. We've been around for years and years, and the reason that I hired Early Growth when I was an entrepreneur is even though you might be capable of handling the finances yourself, chances are your business isn't capable to bring in a 30-year CFO with the strategic vision to focus on that core function that allows you to focus on your business, your team, your customers. So they are a strategic partner in that process in building your team. As I mentioned, we handle the entire finance function, so the complete stack. Whether that's the day-to-day bookkeeping and accounting that happens, the monthly reporting that you need both as operational managers or to communicate with your board and investors, the compliance work around your taxes, the work required to manage your cap table, and things like 409A valuations that if you're issuing equity, stock options, that you'll need from a tax basis. In addition to representing thousands of startups, we also represent many startup investors. So for VC funds and angel funds, typically up to about $100 million, we represent a few dozen investors and their fund accounting requirements. Again, we've been around a while, 11 years, and over that time, we've served a lot of companies. Somewhere around 1 in 5 or 1 in 6 venture-backed companies or early growth clients. And we typically start working with those companies very, very early in the process. Maybe it's just for their tax requirements, and then as they grow and start to operate, it goes into their financing and operational role. And we're typically engaged with our clients for 5 years or thereabouts as companies grow from seed through A through B and C. We work with our companies through M&A transactions, whether they're the acquirer or selling the company. And we even help companies get ready for public offerings. So, so thank you for joining us today. What happens today doesn't happen by us alone, though. We have a lot of partners involved in putting on a great event like this. Like any team, whether it's a sports team or a company that you're building, having the right people at the table are critical to your success. And the team that we have today is what I think of as a dream team. These are the best of the best. Bankers, lawyers, HR folks, and finance folks that help you put together the key pieces, again, so that you can focus on your business, your team, and your customers. I'm going to stop sharing my screen here. And I'm going to, and you'll have to bear with me just a second. I am going to try to call on each of our partners here to be able to introduce themselves. So the first one I'm going to look for here is Philip Alvarado with TriNet. So Philip, I've unmuted you, and hopefully, I don't know if I can.
Can you hear me?
We can hear you.
Awesome. Well, thank you so much, Early Growth. Thank you so much, Dan, for the opportunity to say hello to the attendees of this awesome webinar. Early Growth has been a longtime partner of TriNet. We appreciate all they do for the startup community, as well as for our own personal clients and the ecosystem around us. My name is Philip Alvarado. I'm the Industry Director of Sales for Technology here on the West Coast for TriNet. My team specifically supports and works with fast-growing startups, early-stage startups that are looking to scale faster, lower their operating cost, and extend their runway, and in addition to protecting their company's valuation. Our goal, just like Early Growth is to put you in the best situation moving forward so you can achieve the success of your organization and your company. In addition to that, we are very fortunate to have worked with some of the most incredible tech companies like Early Growth has, having Stitch Fix under our belt when they were 5 employees and growing them to over 3,000 employees, or working with some household names like Snapchat, WeWork, and Ring.com. So we appreciate this opportunity. We are here to support any founder or any CEO or team that is looking to lower their operating costs, get HR and compliance in order for their company, and protect their company's valuation. So thank you so much, Early Growth. Thank you, Dan, and taking it back.
Thanks, Philip. Again, as an entrepreneur, in that first few months of starting my company, I hired Early Growth and I hired TriNet. The next thing I did was I opened up a bank account at Silicon Valley Bank. And so Carly Kaiser, I've taken you off mute, so please come introduce yourself to our audience and tell us a little bit about Silicon Valley Bank.
Yeah, thank you for having me. Can you hear me?
Yep.
Awesome. Yeah, so I consider myself very fortunate to be a part of Silicon Valley Bank, a bank that is exclusively focused on what we consider the innovation economy and working with founders and teams from inception well through maturity, whatever that looks like for our entrepreneurs. Specifically here, I work in the Pacific Northwest, supporting entrepreneurs on our early and growth stage teams. The bank has been in this industry and focused on these entrepreneurs for many decades now, and we aim to be a resource and a guide for companies who are in that conversation around capital. So whether that is equity raises or debt or all those kind of things, our goal is to accelerate company success as much as we can. So we're here to be a resource and appreciate you including us. Thank you.
Thanks, Carly. Our next partner is Ben Strawn from Perkins Coie. Most of our partners here today and our moderator and our VC are from the Seattle area. I've worked with Perkins here in the Los Angeles area. They were a partner of ours and at my last startup as well. Although they weren't our attorneys, they were actually customers of my last startup. And so again, you've got the best of the best here. Ben, I've taken you off mute. You might have to take yourself off mute and you're good to go.
I did. Thank you, Mike. Well, as Mike said, I'm Ben Strawn. I'm a partner in corporate law at the Perkins Coie law firm. The picture that is up is not how I'm dressed right now, I admit, but it's really good to see all of you. I'm really appreciative of Early Growth's role in coordinating and setting these events up, and then pleased to be co-sponsoring again with SVB and Lighter Capital. You know, as Dan suggests, I'm sorry if I said Mike, as Dan suggests, co-sponsoring used to mean hosting in our offices. So we don't have the food, but it's great to see that we get a wider geographic range of participants than just the Seattle area. I'm joined by my colleague Arian Galvez, and we're both members of Perkins' Emerging Company and Venture Capital Group. As you might guess, we help early stage companies with formation, financing, capital structure, options and equity compensation, intellectual property ownership, and ultimately sale or other liquidity. And we always enjoy working with early stage companies on legal matters. It's a key part of our firm's practice. And we understand that for startups, cash is tight, and it's important to accommodate this, which we do through a system of deferrals of fees and discount in the early days. We do not ask for upfront retainers. And we provide a number of non-billable services, including input on pitch decks, introductions to potential financing sources, and periodic coffees, which of course are now virtual, with our clients. And that arises out of just the basic fact that this relationship, our work with early stage companies like our other sponsors here, it's very much a partnership. And the relationship that we establish keeps us very invested in our clients' success and helping them get off the ground so they can get to the next level. I appreciate everyone taking the time to join us today, and I look forward to hearing from Kellan.
Thanks, Ben. Last but certainly not least is Zach Moen from Lighter Capital. Lighter Capital is a Seattle-based alternative finance company, and Zach, I'll let you describe what you guys do because you'll do a much better job. You should be off mute.
Hey, thanks, Dan. Really glad to be here today and be one of the firms helping support today's webinar. Really excited for the content and the long history we've had of working with you guys at Early Growth. You've been great partners. But just per Lighter Capital and what we do, we're an early stage non-bank lender. If you think of the lending continuum, we generally come in with debt capital before traditional venture debt or tech bank financing would come into play. And so we tend to help those earlier stage companies that need anywhere from 50,000 to 3 million in growth capital or working capital. We have revenue-based financing products, term loan products, and lines of credit as well. To date, we've lent around 700 rounds of financing to 400, mostly software and tech businesses all across the US. And we also are lending in Canada now as well.
Awesome. Zach, thanks for supporting us in this event. And I do encourage everyone to take a look at what Lighter Capital does. from a debt perspective, it's really a great option as an entrepreneur to look at non-dilutive ways of financing your business. Okay, so we will get started here really quickly. Let me come back to just a few more things here. Just before I forget, Early Growth has a promotion running here. We're coming up to a tax deadline. If you extended your taxes of October 15th. If you were formed in 2019 or earlier and need help with your taxes, we've put together a promotion of $500 off our normal rates. That typically means a tax return. The preparation is about $2,000, which is a screaming bargain. If you need help, get in touch with us immediately because the deadline's the 15th and we can't help you at the last minute. So you need to get signed up by October 1st. Okay, we're going to do a little poll question here. And I just want to see who's in the room because we've got close to 200 people here today. Okay, so let's launch the poll here. We've got 2 questions. One, in honor of our Seattle folks, who's the best Seattle band ever? And then 2, tell us a little bit about where you are in terms of your financing. I'm going to leave this poll up here as people start to answer. But I did want to introduce our moderator for today, Michael Lilly. So I met Mike on his first day at Early Growth. And as he was in the LA market and the market manager for Early Growth in LA, I was introducing him around the startup ecosystem. 6 years later, Mike is in charge of the Pacific Northwest. He's our West Coast sales director. And you're not going to meet someone that's more connected in the startup community on the West Coast from Seattle to San Diego than Mike Lilly. So with that, Mike, why don't you come in off mute and you can pick us up the rest of the way here.
Yeah, that's
our VC. What I did want to do is just take a look at the poll results. You guys should all be seeing the poll results up there. So, boy, it's really tight between Nirvana and Pearl Jam. That was kind of expected. But I see we got some classic rockers there who are for heart. And when it comes to financing, it looks like people are just getting started and right around the seed round and the Series A round.
Dan, what's the breakout? I can't see it.
So we've got 44% who are currently raising a seed round.
Okay.
7% who just raised the seed round. So 50% of our audience is right around the seed round level.
Cool.
And we've got 13% that are raising a Series A.
Okay.
Another 10% are just getting started.
Fantastic. Well, I appreciate the kind introduction there. Just a couple more things on me real quick. So I was actually part of the first Meet the VC event a few years ago. And we haven't done one in 6 months. So thank you everyone for pulling this together and also giving me an excuse to wear a button down for once, which has been really kind of nice and refreshing. But the best part about this event series is really trying to make venture capital more transparent. So we've got some basic questions that I'll go through with Kellan on the block and tackling of what he's doing and some common questions that you guys probably have as well. But if you've ever been to one of these live, you know that the best part about them is just the interaction with the audience. And so that's really kind of the aim here today. And then our dear friend Kellan, I'll just give him a quick intro. So Kellan, this is a brand new fund, Fuse Venture Partners, and I'll let him tell you a little bit more about that. But we've known Kellan for years back in his Ignition days. Really great guy and does not hesitate to, you know, go above and beyond and spend the extra time with founders and entrepreneurs and kind of helping them get to that next level. It obviously shows in the portfolio work that he's done at Ignition. And yeah, some great things coming at Fuse as well. So Kellan, do you want to talk a little bit about your background and how you got started?
Yeah, you bet. And first of all, I just want to say thank you to Michael, especially you. You know, it's been a great relationship and friendship we've built over the years. You guys have been fantastic partners to Ignition and now Fuse and the companies we back. Also, just some familiar names, Perkins, SVB, Trinet, and Lighter. So Thanks to everyone, a great group of folks putting on this event. For those of you that don't know me, I began my venture career in 2013 at a firm called Ignition Partners. And Ignition has been around for 2 decades, 6 separate funds, and backed some of the world's most preeminent modern software companies. We're the first money in DocuSign, early in Splunk, Cloudera, Apptio, and PagerDuty, just to name a few. Doubling down on the enterprise focus in 2013, we opened up a Bay Area office, and we're the only firm to have a shingle in both locations, really connecting the biggest startup ecosystem of the Bay Area and the next most important software ecosystem of Seattle. Invested funds 5 and fund 6 on that thematic, and fast forward to today, Ignition decided not to raise another fund about this time last year. And so looking at the Seattle ecosystem especially, really carrying the Ignition torch forward, several of us from Seattle, Ignition Seattle, decided to raise a fund of our own called Fuse. Kicked off that fundraise on February 24th, arguably the best time in the world to raise a first-time fund. Into a couple twists and turns, got our first close done by June 30th of around $70 million, and are now on our way to raising a larger fund than that, but open for business to back software companies reinventing the modern economy at the seed and Series A stage. So really excited to be here.
Fantastic. And we know that it's not just you over there too. So you've got an awesome team, including a Super Bowl champion linebacker as well that you've pulled together. So tell us a little bit more about that.
Yeah. So I'll start with Cam first, who's the other general partner of Fuse. And Cam, I hired him at Ignition in 2017, and he was just a rock star out of the gate. Huge contributor, bringing in some of the best deals that Ignition was seeing. And so he really accelerated Ignition's presence, especially in the Seattle market. As part of the fund, we also were able to get a man named John Connors joining as an operating partner. He runs Ignition. He also used to be the CFO of Microsoft, and before that ran the Worldwide Enterprise Group. Also got an operating partner named Satbir Kanuja to join, and he reported directly to Jeff Bezos from 99 to 2006. And so 2 guys with phenomenal operating experience really to help us with supporting all the entrepreneurs that Fuse backs. So seeing every deal and then supporting the companies with that white glove VC approach. And then the Bobby angle. Yeah. Everyone always asks how Bobby got involved, and John's known Bobby for about 7 years. Bobby has spent his last 3 years in the off season, spent interning at Ignition, essentially, really immersing himself in our business. And we knew he was just a remarkable talent. Everyone knows him for his on the field presence, but he's a prolific investor, highly entrepreneurial in negotiating his own contract. And so when the opportunity and the conversation started to go towards getting him involved in Fuse, it was a no-brainer for us. And he's been super influential in fundraising. He's been fantastic in CEO engagement. He's a big brand. I never thought ESPN would covering a fundraise we did. Well, they did. And I don't think that's because of my high school football tape. And so we think we got a pretty special recipe, especially for a Fuse Fund 1.
That's fantastic. And I know you can't name names, but congratulations to you as well. You extended your first term sheet on Monday.
We did. Yeah. And, it's through a relationship we had built over the years. The CEO, he immigrated to Canada when he was 6 years old from Iran. He was invited to join the Canadian Olympic wrestling team. So he's a highly competitive guy and a close friend of one of the CEOs that I previously sat on the board of. And so when we've been tracking this deal for the last 10 months, they build software that automates fraud detection for insurers. When it came time to do the deal, we preempted the round and signed the term sheet on Monday. And so we're really excited about. We're proud to call it the first Fuse deal ever. And we think it has really, really promised to reinvent how fraud is detected using AI and behavioral signals.
Love that. And that's a great signal too, that you guys are super active doing deals in the middle of the pandemic as well. It's a great, positive signal there. You mentioned the fund too, just coming to some of the parameters there, $70 million. Just going through that, check size, geographic preference, the stages you invest in. Is it agnostic, or is it really that Seattle focus, or are you guys kind of across the board opportunistic? What's that look like?
So a big part of the motivating factor is Seattle, we think, is the most exciting and important software ecosystem in the world. And if you look at, we're all doing this session on Zoom right now. Well, the cloud that powers this application was built in Seattle. So the world's internet is built out of Seattle. The foundation that powers the world's internet is built out of Seattle. So incredibly important technology ecosystem, very undercapitalized relative to the amount of tech talent and companies here. And so the disconnect was a big motivating factor for Cam and I to really set on our own and double down on this ecosystem. Looking at check size, we have 80 committed right now, and we can't talk, due to some legalities, we can't market it. But we think we'll be deploying, roughly $100 million over the next 4 years. What that means for us is we really like to get involved with founders that have product in the hands of customers, don't necessarily need to be paying it, but we really want to assess the product in the customer's viewpoints. So what's the before and after effect of the product? And really, how good is the team at delivering on what they commit to with customers? Are they exceeding the KPIs that they set with their customers? That's where we like to vector in, and that's at the seed and the Series A level. So we think our average check size will be between $2 and $6 million. The first term sheet we just issued, we were doing about $5 million of a Series A round. And so between 2 and 6, we'll go down a little bit lower than that, but really work hard to help build the team. And then with our LP community, which we're really, really proud of as an extension of Fuse itself, help with early customer access. We got execs from all the major Seattle brands as LPs into our fund, and that really just serves as a direct line of preferred customer access to help with business development.
Got it. Okay, got it. And then do you have a preference for, leading rounds or taking a board seat in that as well?
We generally like to lead rounds. That's always been our practice at Ignition. But with that said, we want to be part of the best software companies being built in this region. The Pacific Northwest is a powerful region. So we like to say we take the friction out of being part of the best companies. So we don't need to take a board seat. We don't need to own 30%. We want to be part of the best software stories built in the Seattle area. So we think we'll do half board seats. We'll do 12 to 15 deals in Fund 1. But really, we want to be part of the Seattle success stories built here.
Got it. And then tell us a little bit about just what your decision-making process looks like, from first introduction or someone reaching out to you cold through execution of that term sheet, or, successful term sheets after that. And so what's that kind of look like?
This is such an important question, Mike, because I encourage all founders on this call and elsewhere to really understand what a VC's decision-making process is. Otherwise, you can get caught up in this never-ending cycle of meetings and meetings and meetings with no outcome. And a quick no is always much better than a long no, because time isn't scalable. So really understanding what each VC has a different decision-making process, what each VC's decision-making process is from the outset, and asking that question is an okay question. For us, we like to get to know entrepreneurs early because, from investment to outcome is 10 years, and that's longer than the average U.S. marriage now. So you really get married for 10 years.
Yeah.
So you like to date before you get married, and really spend the time. For us, usually that starts at, when they're spinning out of a company. We help them craft the story, help with some customers, some talent help, but there's really no decision to be made. When the company gets to a stage where we really like to lean in, we'll start introducing you to potential customers. And we'll listen in on those calls as we do our diligence and really learn, is the story resonating with these potential customers? So hopefully we're building some goodwill, which is reflected on the cap table. When it comes time to make the decision, we've obviously done our work. We've solicited John and Sapir's and our network's feedback in the form of diligence. But for Fuse, Cam and I have a unanimous decision to vote on every single deal. So we have to get the yes from both of us to move forward. And we can move quickly. We can move partner meetings. We like to be flexible, again, for the sake of taking friction out of being part of a great Seattle success story.
Got it. What's changed about that process due to, let's say, COVID-19 and the lockdown, if anything? And what are maybe some of the things that you're looking at now that maybe you weren't looking at or just thinking about differently over the last 6 months or so?
So that's a great question, and also one that entrepreneurs should be asking the VCs is, will they make an investment having never met a founder before? And that has been a slowly but emerging theme that yes, investors have money. There's a lot of capital out there. They will make investments without meeting a founder. Generally, it'll be down the middle of a fairway of a space they know, and also with entrepreneurial touch points. So if it's a VC that you've never met and you have no connections to, unlikely that they might make a decision. But let's say that you share a common seed investor and you as an entrepreneur are close friends with one of their portfolio companies and it's a space they like, just like us on Monday, high likelihood that you'll actually be able to move forward with the VC, potentially having never met them. I have met this CEO, but because we've been tracking it for a long time, but because you have to have multiple touch points, that's a good way for you to get a VC comfortable having never met you before.
Got it. Awesome. There's a few questions that have come in around the geographic focus in Seattle. Can you talk a little bit more about that as well in terms of, obviously you're super bullish on Seattle, but are you exclusive to Seattle? Like talk about that as well.
Every VC is always marketing to the entrepreneur that they haven't met yet. So you're always keeping the door open and giving yourself optionality. So I will start with an it depends.
Yeah.
And again, our number one priority is to be part of the software companies, the best software companies being built in the Pacific Northwest. Mm-hmm. And with that said, there are occasions where we will get on a plane and we'll go do a deal in a different geography, in a category that we really like and we think we can add a lot of value to. And so this happened when I sat on the board of BotKeeper. We were inspired by a company getting built in Seattle, using software to automate the office of the CFO. Started to really canvas the landscape and spend time. And if you think about the accounting world, there's lots of data, there's lots of transactions, and BotKeeper helps accounting firms provide better workflow, just like yourselves. They provide better workflow for accounting firms. They don't try to replace anybody, they just try to provide better data for folks. And so we got on a plane and went and did the deal in Boston that we got excited about, rather than invest in the company here. And we're glad that we did. And so there are occasions where we will get on a plane.
Gotcha. One of the questions I love asking during this event, because all VCs talk about it, is how do you provide value beyond the check, right? Everyone says they do, but how do you actually do that?
So where we lean in, where there's product in the hands of customers, but it's an early team, the first thing that we really go to work on is helping the CEO and team identify where the key holes that they need to fill are, and then really going hard in the paint on helping them recruit. And so this term sheet that we have signed on Monday, we're already introducing the head of customer success. We're introducing engineering talent. We're filling their funnel of the top talent that's in our network that's looking right now. And so that's step number one. Step two is once you have the team built and you have capacity, opening up our customer Rolodex, which are sometimes in the form of RLPs or just in our network, on really working hard to get the preferred access to customers. So team building and then customer access. And then once you get that flywheel going, it really sets the company up for the next stage of financing.
Mm-hmm. A lot of people, as you saw in the poll too, are kind of around the seed stage, either they're pre-seed or about to close. What should we be thinking about as they kind of get closer or trying to go out to raise a Series A? I mean, we always talk about the huge drop-off between seed and Series A. I also think, VC funding has been really high throughout this entire pandemic, but you've also seen a huge drop in new company formation and also new company funding at the earliest level. Mm-hmm. So what are some things that we should be looking at there as well?
So I'll start with that second point first. Is we in a time like this of severe uncertainty, you generally see a volume drop off, like you alluded to, of the number of company formations. And we don't think that's necessarily a bad thing, because in the boom years, a lot of entrepreneurs are starting company for the wrong reasons, just to try to make a quick buck, not trying to go build something to solve a problem they experienced. And so entrepreneurs that start a company in a time like this of uncertainty, a lot of times start a company for the right reasons, which is to solve that problem. And their risk appetite is much higher to go build something consequential, which lends itself better to the VC world. So lower volume, but a lot of times higher quality of deals.
Yeah.
So that's to the first point. When you do start a company and you have your seed funding or you're looking for your Series A, it really comes down first and foremost to the storytelling. At the earliest stage, it's all about the sizzle and the story. The Valley, there's no geography in the world that tells stories like the Valley, which is one of the reasons why the seed funding there is so prolific. The other thing is once you have an early product, you might get a couple early alpha customers, early beta customers, giving them the white glove, pick up the phone at 2 a.m. approach, solving their problems, making them love you and be your best sales reps is something that we index for super heavily at Fuse. Customer obsessed is one of our top 3 investing criteria. And if you have that and you get introduced to more and more customers, if you're always building with that customer success and customer value obsession, is highly correlated to the degree of success and outcomes.
Makes sense. You know, we've seen some huge success stories throughout this too. We've got a lot of companies that are killing it in healthcare, some SaaS companies as well, obviously, and then a huge segment of our e-commerce population is doing quite well, as you can imagine. But just wondering, I know, you know, we have 161 people on here. Some people don't necessarily fall into those 3 industries. So what are maybe some things they should be thinking about in terms of traction and maybe to kind of how to improve their outcome as well?
You know, there's some industries that are seeing tailwinds due to COVID. There's some industries that are seeing headwinds. And when you're seeing headwinds, we really encourage companies to, you know, pull your foot off the gas and focus on getting the product right, focusing on a narrower set of customers and making sure you get the product right to where when we're riding a wave of economic expansion again, you still have the capital and you persevere through a challenging economic environment. On companies that are having those tailwinds and you're a market leader, it's putting your foot on the gas.
Yeah.
And so the first thing that we did at Ignition when COVID was starting to wreak havoc in the US was, you know, it's oversimplified with the 2x2 matrix, but it's well capitalized and executing well. That's when you double down and you have tailwinds. Well capitalized, not executing well. That's when you pull your foot off the gas and get the product right. Not well capitalized, not executing well. You work hard to help find a home for that company. And then executing well, but not well capitalized, really rolling up your sleeves to make sure that company gets funded in a time of uncertainty. Now, both the companies I was on the board of when COVID was really wreaking havoc were both raising money. They both had, you know, 3 to 5 months of runway left. And so it was rolling up the sleeves and making sure the story was right. We were up late at night working on making sure the right investor contacts were made and you know, we got them both funded. But those are companies that you really wanted to make sure persevered through however long the uncertainty was going to last.
Awesome. Yeah, that makes perfect sense. Should we also be thinking about, you know, just other alternative forms of financing or just ways to reduce cash burn? I mean, what's kind of your guidance been along that throughout this whole thing?
As soon as the pandemic hit, companies that had lines in place, we encouraged them to draw down on those lines just in case.
Yeah.
Sometimes that freaks the banks out a little bit. But the lines were in place and cash is king.
Yeah.
And so we saw lines getting drawn. We also encouraged the companies to potentially raise a little bit of an extension or a bridge at the last round just to provide some extra cushion. And then it was an opportunity really to focus. A lot of times the psychology of entrepreneurs is you know in your gut the decisions you need to make, but there's never a forcing function to make those. Well, COVID was a forcing function to make harder decisions and really focus companies on what is working and trim some of the points in the company that weren't working. And so those are kind of the 3 main things that we really saw happen in March and April, especially.
Gotcha. And what do you think, you know, your most, I guess, going back to, I mean, this could be the whole experience that you've had as a VC, but what are some of the things that those entrepreneurs that have been able to pivot quickly or adjust to, you know, react well? What are some things you think that they do really well? What are some things maybe that people could improve upon? You know, what are those stories that you've seen in that regard?
What we have seen work really well with CEOs that use this as an opportunity to focus the company. It's hard to exhibit change if a company is really working, but it gets bloated a lot of times, and so it's hard to inflict change when the company is optically doing well. When you do have, you know, COVID or this reset that's happening in the economic world, it gives entrepreneurs and companies a time to reflect and really focus. I mean, I can't emphasize the word focus enough. And part of this Series A term sheet that we signed, they tried to do earlier on. They tried to do, and they'll admit this, they tried to do too much too early.
Yeah.
And they really found their footing earlier this year in fraud detection. And I was so happy as we're going through the diligence process. They have one large deal and they have 6 pilots lined up. They're all for the exact same scenario. And so they use this reset as a chance to really focus the company on what is working, no questions asked, but focus on where there's actually momentum. And so can't reemphasize the word focus enough.
It kind of just reinforces everything that an entrepreneur should do. Target a beachhead and then figure out a way to expand after that, but dominate that one particular thing really well and take the market share away from the bigger company potentially that's not doing it so well, right? It's the same principle, but it's just highlighting that it's now more than ever, it's more important to do that, I think, right? So
entrepreneurs are super aspirational. They're ambitious. They want to go build a lot to create a lot of value. And it's very natural for people to go after too much too early. And so many times you find yourself pulling back a little bit to refocus, which isn't necessarily a bad thing. It happens in almost every company I've ever seen.
Sure.
But pulling back a little bit and reorienting and refocusing on really what has worked and doubling down on that.
Awesome. And then in terms of, what the next, I mean, no one has the crystal ball, right? But what's the next 12 months? Maybe we shouldn't even go that far. What's the next 6 months hold for you and kind of what you guys are planning? And then after that, what's the most exciting thing to you right now that you're looking at?
Yeah, the next 6 to 12. If I had a crystal ball and it had exactly what that looked like, I would have been in Snowflake in 2012.
Yeah, we would have been moderating this from your yacht. I get it.
Or whoever else in bed. Yeah, exactly. It's clear that software has proven to be a very durable category, and it's so rare in any of our lifetimes that there's a behavioral shift happening as fast as happening right now. And software is the key conduit that's enabling our personal lives, but also our professional lives to continue to operate in some level of normalcy, whatever that means. But software is the category that's proven to be the most durable in this reset. And so we're really, really bullish on software. We think enterprises are just really accelerating their projects. Their 5-year projects are being compressed into 2 years of their digital transformation projects. And so it's a forcing function for people to take a lot of cost out of the back end, figure out how to have better operating models in a remote world. We do think the world will come back to the office at some point, probably after the election or after there's a vaccine. But the return to some form of office work will happen. Maybe it's a 4-day week. But as one thing is clear is that we are all accelerating our software adoption as a result of this behavioral shift.
Awesome. Very cool. Dan, how are we doing on audience Q&A too? I don't want to monopolize this. It's going well. We've only lost 2 participants, so that's good.
That's a good sign.
Probably my comment.
So one question from the audience here is about the fund philosophy.
Mm-hmm.
Are you guys singles hitters or are you home run hitters? And how do you think about that? Having
grown up at Ignition, every deal that we look at it from the purview as, can this return the entire fund? And, that's at different stages and different outcomes, but can it return the full fund target? And so I would classify that as in the home run category versus trying to turn a $5 million investment into a $10 million investment and doing that, 10 times over.
Awesome.
Excellent. Okay, so let's pick another question here. There's been a few questions around industry. Some folks asking about cannabis technology, some others about cybersecurity. Maybe you can talk a little bit to some of the hot industries that you see out there and how the fund is focused.
So I would say, as a blanket statement, we don't have a strong thesis or point of view around cannabis. And then in cybersecurity, having not been an engineer, I'm not going to, and Cameron not being an engineer, we're not going to pretend to be the best cyber investors, although we recognize that it's a very important, especially with remote work, it's a very important category. Where we really like, the sectors that we get most interested in is software that is generally sold to business users. both in vertical oriented solutions, but also horizontal software projects. We like things that automate back office, manual, repetitive business operations, like call center technology, like supply chain. And we really look for areas where there's data, and not just data aggregators, but what's the quantity and the quality of the data. And so do you have unique data, and can you combine that unique data with additional data sources to provide a next-gen analytic solution for your customers?
How about digital health? I think with COVID and an election where healthcare is kind of at the forefront, a lot more people are thinking about the healthcare industry.
This is going to change how healthcare is delivered in a radical fashion, we believe. Instead of having the patients come to the services, i.e. go to the hospital, we believe this shift that's happening is the services are going to go to the patients. So whether that's remote patient monitoring or telehealth, people and doctors, practitioners are getting way more comfortable delivering healthcare services over a digital platform. And I think that's only going to continue. And in a lot of those cases, it's more dangerous for a patient to come into a clinic to go see something that could have been delivered over a digital platform. And so that behavioral shift is happening. It'll be interesting to see how long it perseveres, but the CPT codes that were written for remote patient monitoring and other services are conducive for digital health.
Mike, you want me to keep going?
I'm actually just reading through the Q&A here, but let's see.
I think we always have questions as each entrepreneur has their own industry that they're focused on. I see one about ed tech. And again, I think in this pandemic world where distance learning has come in, more people are thinking about the problems that exist in education as well as a space. And so any thoughts on that space?
It's really an interesting, I'm not a parent, but I really empathize with parents, working from home and having 3 kids that are all on Zoom, where they've been telling their kids to stay off their iPads and computers, but now it's like, well, never mind, you have to only learn via an iPad or a computer now. And so it's a really interesting psychology experiment. Don't want to call it experiment, problem that we're going through right now. Also, if you look at some of the more underserved communities, do they have access to laptops or iPads? And so the socioeconomic impacts, will be, I think it'll create more challenges. I do think there's going to be a reskilling of a lot of employees to become more technology forward. This is a unique opportunity to do so. So the coding, the technology platforms that teach these kinds of courses are becoming in higher demand, especially sold to the enterprise. But it's going to be a really interesting shift to see how this unfolds, especially with K through 12.
This is an interesting question. How do you think the pandemic breakdown in supply chain has impacted the importance of live data and visibility and communication?
The obvious statement is every company wants to reduce their dependence on China.
Yeah.
I'll take that one click deep. I think most companies are really reevaluating their single points of failure with whether it's a manufacturing of a Boeing airplane or creating of a car. What are the single points of failure and how do you de-risk that? Also, how do you understand your supply chain obligations? One of our companies at Ignition is a company called Icertis, and what they do is they sell contract management software to the enterprise to help them manage their vendors, i.e. their suppliers. And so if you have more visibility into your supply chain and your supply chain obligations, what does that look like and what is the risk there? And so we saw accelerating demand for Icertis when the pandemic and the uncertainty around supply chains was happening.
Got it. Let's see. I was pouring over a couple.
Yeah, there's one topic here. It wasn't a very detailed question. Just said mental health, and we were asking you about industries, but certainly when we start talking about startups and entrepreneurs, the subject of mental health, I think, is a pertinent, relevant topic, and something that's been accentuated by everything that we're going through in our personal lives. I wonder if you could share some perspective on that and maybe some advice for the entrepreneurs out there who might be struggling with one thing or another related to their business or otherwise.
Yeah, and this is a category that is probably the most near and dear to me due to a personal experience 10 years ago. And so something that I deep empathy and sympathy for. One of the things, being a CEO and an entrepreneur is a very lonely job, very, very lonely job. And you're managing a board, you manage your companies. There's a lot of financial risk. One of the things that I think is so important is to go build your informal CEO board of advisors, your CEO networks, because it's a way to be less lonely and learn from each other in a more comfortable, full disclosure, full transparency, take the cuffs off setting. So having your informal CEO network of friends and advisors that you can get with once a month or even more frequently is so important. We've seen that play out over and over. Also think, really taking the stigma off seeing somebody. And I hope one of the big outcomes of this shift happening right now in 2020 is taking the stigma off for people to go see somebody. It's nothing to be ashamed of. It's something that we've all, a lot of us have done. And so building that CEO network, being intentional about getting the help and listening to people.
Yeah, my last startup was a co-working accelerator incubator here in Los Angeles, and we were providing a lot of those connections for entrepreneurs. That being said, we had a few of our clients, a few of our members commit suicide, and it is a tough thing. I've been in the startup world for 25 years, and it is very, very easy to get isolated as a CEO, as a founder, even as a company, as a startup. As you go heads down, you can get isolated. Yeah. And so your informal networks, even some of your formal networks, a great investor is an advisor. The team that you put around you, your employees might be tough for you to lean on, but if you've got folks around you like your lawyer and your CFO, if they're outsourced, those people become folks that you can lean on. And it's just really, really important. You're not in it alone. There's always a desire when people say, how's it going? It's going great. We're growing gangbusters. And you're struggling. And I think definitely a byproduct of what we've been going through is it's okay to be a little bit more honest. It's okay to ask for help. But you really need to build that network and keep those connections in place.
Yeah, just a quick, we kicked off our fundraise February 24th. Cement was fundraising, BotKeeper was fundraising. And so it was the stress level, especially through March, the lows were really low. And, one of the things that we would do is I would do personally is, I wouldn't drink it all, and I'd exercise and I'd drink a lot of water is kind of the three things. And I would just kind of measure how that would impact my outlook on the day and outlook on what we were doing. And that was just a couple simple things that I would do.
In the chat, while we're on this subject, someone asked any thoughts on companies like Lydia and Talkspace when it comes
I'm
to...
not familiar with those two companies.
Yeah, either am I. Okay. Mike?
Yeah, there's a really interesting one actually that I've never heard answered before from any VC, and completely unrelated though, so sorry to shift gears here, but how do VCs value the different types of patents, as in provisional versus filed versus awarded patents?
Earlier stage, you look, what we index more heavily is the quality of the engineering team, what the experience is versus a patent being filed. And
yeah.
So we'll look at the quality of the CTO, the VP, and the engineering team. And that's really where we index way more. I think as you go later stage, then the IP strategy becomes more important to protect yourself. But earlier on, it's a lot of times where we get involved, you're not going to see, you'll see patents filed, and that's great. We'll lean on IP counsel for help there and understanding what that means. But then post-investment, we got a guy that we've been using that did help with Splunk's IP strategy. we introduce them to all of the companies that we work for that really helps the companies out with that strategy, what you should do and what is just a total waste of time. So
Yeah.
we lean on help there.
Okay, gotcha. Dan, do you have a couple more you want to ask?
Yeah, I saw a question early on, and Kellan, you've been a VC for close to 10 years, right? And someone asked, any advice for someone looking to get into VC as a career?
Yeah, it's such a weird industry that's hard to explain or hard to know, I should say, who's going to be good, who's going to be not work out in VC. And it turns out 10% of the people that are in VC each year. And, Cameron's the best example that I use on someone looking to get into VC. He called me when he was at Vaquero doing investment banking. And, I thought he was just going to ask if he could, have a job or what the hiring strategy was. He spent the entire 30 minutes asking what Ignition's software focus was, what types of deals we were really excited about, and took that as an action and then started sending really interesting stuff my way. So we started to build a relationship. There was not one ask that he made. He then started to shift, over about the next 6 months, shift the discussion towards the hiring strategy after he had already showed a lot of value. And it was clear that he was going to hustle. I really liked him. And I told him, don't limit your career focus to VC in Seattle. There's just not a lot of options right now. And we don't have a hiring plan. And I don't know how often Madrona's hiring, maybe one associate per year, but you're limiting yourself. Well, he goes against my advice, moves to Seattle and raises a fund of his own, a small micro fund. And so then I'd see him at all the events in Seattle and continued to see how he'd interact with founders, that he was hustling. He was doing the day circuit, the night circuit. And excuse me, when it came time to hire an associate, he was the obvious choice because he knew the game. I saw the way he interacted. I respected the hustle. I liked the guy a lot. And I thought he had a good filter on deals based on the stuff he had sent me. And so it takes a long time because partnerships are complicated. But once it came time to pull the trigger, we moved really fast and got it done. And so I think it's getting to know the VCs. It takes a lot longer than just a job description or a job post. Getting to know what the focus is, seeing them out in events that you weren't intentionally seeing each other, and just building that familiarity is a really important way to go.
So we're coming up here on 1 o'clock on the West Coast, which is our official end time. And I know that folks may drop off. So I just we're going to stick on for a few more minutes and answer a few more questions as they come in. If you want to stick around, we're going to go into overtime. But for those of you that are dropping off, I did want to thank you for attending. I wanted to remind you that we are going to follow up via email with a link so that you've got the recording available to you. We will run these webinars every month. I know a lot of the questions came in and at the beginning asking, hey, is this a Seattle focused one? And the answer is no and yes. As we do these, I think they'll always have some geographical focus to them. The next one that we're planning for October will be focused a little bit more on the San Francisco, Silicon Valley ecosystem. But Early Growth has a national footprint. And so we'll be doing some that are East Coast with a little bit more of an East Coast focus. But I do think that the content that we shared today is broadly relatable, both nationally and potentially internationally. Because I know, again, spending time both in Asia and Europe, our international entrepreneurs look at the US both as a great customer market, but also as a great fundraising market. So I wanted to thank you all, remind you we're going to follow up. Remind you if you want any introductions to our partners, you can always reach out to us. The easiest way is to just send an email to webinars@earlygrowth.com and we'll make the connections. But we will send out follow-up. And for those who are leaving us at 1 o'clock, we hope to see you back in the future. For those that are sticking around, let's keep digging into the Q&A. And Mike, I don't know if you've got another question that you want to start us off with.
Yeah, so what's the Fuse Ventures take on Seattle deep tech foundational AI?
It's the best ecosystem for foundational AI in the country, if not the world. You got the world's 3 most important cloud products being built here. There's 500,000 tech workers here. The engineering bench and talent pool here is second to none.
Gotcha. And then to follow up, Kellan, on the earlier point you made about starting an advisory board as well, there's another question here that relates to that about how you go about identifying a mentor or advisor around complicated issues, and just some advice on that as well.
It takes time, but one of the things I've noticed, a lot of people, if you ask them for a coffee for 30 minutes of time, and you have a good rapport, they'll do it. They'll take the time. They'll meet you for a coffee. If you have the rapport and it's a great session, they'll continue to spend the time if they see something in you and the opportunity. And really being intentional and asking for help. It's a busy world. We're all busy. You don't get what you don't ask for if you don't ask.
Yeah.
And so it's never, when we kicked off the fundraise, we knew it was going to be hard, especially when the world was falling apart. And so we asked for a lot of help. As soon as we'd get someone that says they were going to invest, we'd say, who else do you know? Who else do you know? So get the order in the intro, and, not ashamed by it. We owe a lot of swag to people, but asking for help is what you got to do.
That was also, I didn't really intend for that to be a loaded question too, but to the person that asked that, it doesn't just have to be, through your VC to get an introduction to a mentor, right? Like just utilize people like us, service providers, because we know people that, have worked at other companies that are maybe hopping around or have the time to take you on as kind of a mentoree, so to speak, too. So I think it kind of goes in tune with what we've always said, which is you should be asking people what it is they can do for you beyond their actual service, right?
Yeah.
And that's part of the reason why we've selected the partners here today. But that also just goes, for us too, which is like, we don't just want to be a bookkeeping and tax shop. We want to really help you and partner with you. And so that means introductions to people that, you could potentially hire, or that means people that you might be able to put on your board, because we just know a lot about the movement in the ecosystem and the network. And so I think, don't hesitate to lean on those types of resources as well. And the other way that, we've built a lot of our network is just being out in the community. I mean, it's tough now, but doing virtual events, happy hours, start pulling those people together over Zoom, check in with them frequently. Because the best time, like for fundraising, or really the best time for mentorship, is when you don't need it. And so, start to build those relationships that way.
Yeah. Wasn't someone that at Ignition or Fuse that said this, but I once heard learning on somebody else's nickel's the way to go.
Yeah.
And learning from somebody else's scar tissue and experience so you don't make those same mistakes just gives you a leg up.
Yeah. Yeah, absolutely. Dan, did you have another one you wanted to ask?
Yeah, there was one in here. Kellan, you had talked about earlier that you're looking for customer response in an early stage investment. And I think this is a very, very common question for most entrepreneurs is, great, what is that makes you excited? Is it MRR? Is it users? Is it pilots? What is it that you're looking for as a gauge? And is there any rule of thumb that folks should be looking at that starts to get you and your kind excited?
It'll depend on the VC. Naturally, but what we always ask every customer call is, would you invest in this founder in this company, is the last question we always ask. And it's really interesting to see the responses, especially from folks that are regulated. But if the company or the customer that you sold the product to is effusive about putting their own money behind the CEO or the team and the product, that's a naturally good sign. Also, getting these early customers is not easy. And generally, it's a beta product. It's not fully baked. It's not Snowflake yet. And seeing what entrepreneurs will do and how they'll hustle to get these early accounts. One of the CEOs that I was on the board of, I think he camped outside one of his largest customers' account until the sponsor would take a meeting with them. And finally, the sponsor maybe had like, okay, fine, I'll take this meeting, took the meeting, and now it's one of their largest accounts. And so really the hustle that goes into landing some of these early enterprise deals doesn't go unnoticed at Fuse.
Nice. People love that we answered the mental health question, so let's keep that rolling. And do you back minority founders?
Oh, absolutely. I think this deal that I'll be sitting on the board of is a Persian immigrant. It's the first company I've sat in that doesn't have a female founder. Cement, Persian immigrant, and a female founder. BotKeeper had a female founder, and so we have a pattern of behavior of backing, minority founders. And I don't expect that to change. We look for the quality of the entrepreneur.
Yeah, no, that's great. I'm glad we got to address both of those things. Fantastic. Dan, did you have one?
So this last question that came in is about moving the relationship forward when you're engaged with a VC. And I think this is exacerbated by the fact that it's a lot of Zoom calls. There might be not formal due diligence, but a lot of information and data going back and forth. And just a really difficult time for entrepreneurs to figure out, how do I move this relationship forward, and what the expectations are in this new environment of building relationships remotely and via Zoom. So maybe you can provide some guidance on just how you see that process going, where in the past that you'd have people come in to the office, you'd hop on a plane, you'd be in their office. Maybe some guidance on how entrepreneurs can move that process forward effectively and understand when to kind of cut bait and move forward.
And it's such an interesting dynamic, because a lot of times the VCs will be working you through a process and moving the ball forward, and you might not even be knowing it. And so an example that sometimes we do is we say, hey, we came across this customer that was interested. We talked about what you were building. Would you talk to them? Then we'd sit in on the call, or we get feedback. And now you might be in our process of evaluation, to where if we get enough signal, we will go lean in really heavily and quickly. This term sheet we signed on Monday, they had 3 partner meetings scheduled this week with other firms. We weren't going to let that happen. And so came to a handshake deal on Friday. Whereas if a VC is not putting you through their process or trying to preempt, a lot of times it's sharing customer wins, key hires at the earlier stage. Key hires are a very good signal of talent. If experienced talent is going to a company, that's a very good signal at an earlier stage. So early customer wins and key hires, and making sure you trickle that information to some of your prospects. VCs will information dig and gather and stay updated all day long. And so once you have enough momentum to where customer wins, a couple key hires, you test the market with a couple friendlies. If you get some signal that they start to engage, then you go out a little broader.
Mike, you want to take us home with the final question? I've got one.
I've got one, and then you can end it if you want to, Dan. But top 3 favorite traits in a founder.
Hires people that are better at them, customer obsessed, and is delivering customer value, and is extremely competitive.
Love that.
All right, so you stole the question I was going to ask. And so, Kellan, just to take us home and wrap it up, I'll ask something that's a little bit more open-ended. We talked through a ton of stuff today, and thanks for doing this. If there's one piece of advice that you could give, again, half of our audience were either raising a seed round or haven't even raised the seed round yet. If there's one piece of advice you can give to folks who are heading down this path of raising their first round of institutional capital, past friends and family, from your 10 years, what would it be?
I would say 2 things, especially at the seed stage: story, working on the story, and then making your customers your best salespeople. Whether or not they're paying or not, making them your biggest evangelist to the investors.
It's awesome.
Excellent. Mike, thank you. Kellan, thank you. Audience, Thank you for sticking around.
Yeah, those are great
Again,
questions too.
yeah,
Yeah, those are great questions too.
yeah, we'll be back again next month, and be doing these on a monthly basis. So we look forward to seeing you back here again. Thanks again, guys.
Thanks, everyone.
Thank you so much.
Thanks, Kellan. Thank you.
Have fun. Take care.
Take care.